Global markets have been soaring since last November, thanks to US President Donald Trump's talk of enormous spending and tax cuts. Well, later on, we'll find out the details of his phenomenal stimulus package. Well, at least that's the hope anyway. But politics aside, today we're going to dive into the charts. We've got Paul Rodriguez right here from thinktrading.com. Hello to you.
Hello.
You're a chart man.
Yeah.
You say it all the time. That's what we're going to do today, because quite frankly, nothing else makes sense right now.
Well, the politics doesn't make sense, does it really?
It doesn't.
But that's not why I look at the charts. But
Okay.
there are times when it makes less sense than others, and at the moment it makes less sense than others.
Let's keep it simple.
Yeah, absolutely.
Let's dive into the S&P, shall we, and just
Yeah.
see what's going on in terms of the money and the movement and the chart itself.
Yeah, well, the chart is basically in an upward trend, as you can see. I mean, we're probably going to see the 6 weekly close at a high if it does this week. I mean, you know, and so 6 weeks of rising prices is a long way in any market. So it does set itself up for a correction. But are we right to be bearish on it from a longer term perspective? And, you know, I've been a bear for a while and been proved wrong. But you can be bearish of the market, but not necessarily short the market. In other words, you've got to wait for the signal to tell you that the market is ready to go back down. And at the moment, the trend itself is still very strongly to the upside. So we need something to trigger a reversal. But because it's been moving up so smoothly, that air pocket could be triggered by any event. And you're mentioning that there could be a political event. It could be any type of event that could cause quite a sharp retracement.
So do you think we should be on edge today, during today's trading session, or this evening, I should say?
Well, I think the market will be in any case, simply because if you're long, you're probably going to have very tight stops to capture any profit. And if you're, you know, seeing the market rise in this way, it's understandable that people want to go in and short it. But having said that, the way it's trading, to me, suggests that there has been some really good news that the market's known about that nobody else knows about, because it's rising in such a smooth and non-volatile way. So it could be that we have one final blowout, which is normally, for me, the sign that the trend is over. You know, really sharp move where all the shorts are covered, and then we get the reversal. But it can reverse out in an opposite way, but there are other signs to show that this trend is getting mature and a little bit worrying for a longer and a short-term retracement.
Is it worrying because human nature tells us that it can't keep on going higher?
Well, that's the problem. It can keep on going higher. There's nothing to stop it going high. It will go as high as it wants to go, and I think people fall into the trap of telling the market what to do rather than reading what the market is doing. The market's simply in an upward trend. I can't tell it to go down, and no amount of bearish views will make it go down. It will go down when it wants. But what we can do is trade it with our eyes open. So if you're long, you can be, have a close stop, and if you're looking to short it, then look for a sign that the market has broken a key support before getting in there, rather than just simply selling the high, which keeps getting higher.
Can we move on to the dollar? Let's talk about the euro dollar.
Absolutely.
We'll just get this chart up.
There is an underlying picture that could potentially show us that this is a standout market, and there are other technical signals to say that there's potential for a reversal. So, for example, more dollar strength this year, and we know politically that the situation in the Eurozone is pretty bad, and could get much worse for the euro. So my view is we're going to sail through parity and below in terms of euro dollar, and we've got very low volatility right now, but I think that will change. So I'm looking for these lows to trigger below 105.70 support, and then below that 105.50 on the short-term chart, which you've got up here. This is an hourly chart, but if we were to change that to a daily chart, you would see the big picture here, and we're seeing that the dollar has been strengthening pretty much from February 17 on the middle of the chart. You can see the trend has been towards strengthening dollar, and this is just the start of something much larger, I believe. Much bigger picture, the trend has been down, and short term I think the market's got used to very little volatility, but I think there's more coming.
I want to move on to the European markets if we can very shortly, because at the moment, today, it seems like we're in a wait and see mode. Not much is happening.
Well, not much is happening. Pretty much the markets aren't expecting much more stimulus. I mean, in terms of the FTSE, you've got a weaker sterling, which has impacted the economy, but that is starting to subside and will continue to subside as sterling strengthens. In terms of the FTSE, if we were to look at an hourly chart, a daily chart, what you would see here is that the market has made a high, as you can see in at the beginning of January or the middle of January, we saw a high there. The market's come back down. It's rallied up again, but it's coming back down again. It's in the middle. It's in a middle point where we need to make some decisions. Now, it hit 7,200 and buyers came in really sharply, which surprised me because I thought this was the beginning of the air pocket that would send it lower. But if it breaks 7,200 again, I think this is building into a much bigger top, which is my favoured scenario. If you compare this chart to the S&P, I'm not saying do it now, but if people want to do that, you'll see how the S&P is breaking into new highs, and this isn't confirming it. They might say, well, they're different markets, why should they confirm each other? But that's part of the macro technical analysis that we do. You look at all the markets and say, is this a standout or is it part of the trend? And the S&P is certainly a standout, which means it will reverse back. Similar picture in the DAX index, which I think we've got here to look at too. Just on this particular chart, sorry, on the FTSE, if we go back over 7,300, I think you'd have to reconsider the view from a short-term perspective, because it would suggest that the buyers who came in at 7,200, are going to push it higher. But for now, I think 7,200 is your trigger level for further weakness down to that 7,100 point, which would complete a massive topping formation. So that's my favourite scenario for the moment.
Okay, and let's go back to Germany, yeah? Yeah,
and so the German index, the German 30, you can see that this is in a similar scenario, and if we switch it over to a daily chart as well, you'll see that the 12,000 level was rejected, and it was rejected really hard. Now I'm wondering if the S&P is going to do something like this, where it was in such a strong trend and then suddenly bang, it turns around really, really hard. And now where we are now suggests that this downward trend is going to continue. Very short term, this price action is what we call a pennant formation. A pennant formation is when the market goes sideways, but it's constricting. I don't know if you look at the chart, you can see how the ranges are getting tighter, and we would expect a sharp breakout from that, and the prior trend is down, so that would mean that we could potentially see a strong downward trend from this. So the possibility of a downward surprise, as you suggested, is growing day by day.
And if you are, because today we've got such a momentous event that we're gearing up to, is it possible to be just a technical analyst alone?
Yeah, I mean, absolutely, yeah, always. I mean, because the market, you're trading the market, and the market is the price. So, for example, people will say that the market's gone up because of Trump, but if Clinton was in and the market was up, they'd say it was because of Clinton. So the news tends to fit around what the market does and not the other way around. So if tonight's announcement is a disappointment, yet the market goes up, the description will be that the market liked the news and vice versa. So news tends to fit price. So you may as well start with the price because that's always consistent. And the interpretation we'll leave for other people.
Okay, we'll leave it there. Paul Rodriguez, thank you very much indeed. So we have been glued to these charts. We will be for the next 24 hours as Mr. Trump gets set to make his speech to Congress. It's going to happen at about 2 a.m. UK time. Will the markets extend their historical highs, or will it be a case of buy the rumour, sell the news? Thank you for watching. Goodbye.